Hello, everyone. Thank you for joining us today for our 20 Minutes at the Dairy Office webinar. It is a great pleasure to have Dan Sumner and AcMoody with us today. We will discuss points and answer questions that not only producers and people working at the dairy industry have, but also consumers of dairy products. We're all going through unique, challenging times due to the COVID-19, and of course, correct information is essential for us to make well-informed decisions. So before introducing my guests, let me first introduce myself. My name is Fernanda Ferreira, and I am an assistant cooperative extension specialist with the UC Davis School of AcMed. I joined the faculty team a year and a half ago after finishing my PhD at the University of Florida. And my area of research and extension is herd health and management economics. Dan Sumner, he is a distinguished professor of agriculture economics at UC Davis, and he's also the director of the UC Agriculture Issues Center. He returned to California about 25 years ago after serving as the Assistant Secretary for Economics at USDA, where he was responsible for economic analysis of food and agriculture policy, and also supervising the USDA staff economists and the statisticians. And AcMoody is the economist for the Western United Dairies. She has been with WD for almost 10 years now, providing analysis to the board of directors on various topics of interest. She also provides information to members on a weekly basis through the Western United Dairies newsletter, as well as work closely with WD staff on issues impacting the industry. Those have changed a lot over the years, and especially during these days, her focus has been on policy needed to assist with the current crisis. So it's an honor to host this webinar, having you both here. And I would like to start this discussion today with a brief overview of the facts that led to what we have been seeing in the dairy markets. So producers, processors, and consumers, they're all trying to understand why milk had to be dumped, why consumers had restrictions with the amount of milk they could buy, and if there will be shortages or maybe surpluses of certain milk products going forward. And Annie, I will start actually with you because you wrote a very good article on this topic for the Western United Dairymen newsletter that came, I think, out a little over a month ago when the lockdowns had just started. So can you give us an overview of what is happening and what we can expect for the future?
Yeah, sure. And thanks for mentioning the article. The education piece is a big part of what we do. So it's always nice when to hear the people actually have read it. So it really with the lockdowns, when this all started, the big root, the crisis for the dairy industry in particular, is that all the restaurants closed down. And about half of Americans' budget is spent on eating out. And so that had a really big repercussion for food industry and especially dairy. Now, many people have seen at retail, dairy was flying off the shelf. So, you know, if we look at late March data, we're looking at cheese was up 60%, butter was up 115%, and fluid milk was up 30% in terms of sales in California. And so a lot of that restaurant demand shifted to retail. So that's the good news. But the problem is that with the shift from the restaurant to retail, it caused major logistical issues. And so really dairy plants had a hard time adjusting, and even, you know, trucking companies that haul the dairy products had a hard time getting, you know, all the products to the right place. And many consumers are frustrated by the lack of availability at grocery stores. And you would think that because products are not needed at restaurants anymore, we can just shift them to grocery store. But the problem is it's not that easy to transfer because product preferences are different. You know, the formats, the packaging, what people buy at the store is different than what wholesale purchase look like. And, you know, sometimes installing equipment to switch from one type of cheese to another is extremely expensive. And so it can't happen overnight. And so with all that shift in where the demand should be and where the product should be, there was a huge bottleneck at warehouses because products were trying to adjust to where, you know, the higher demand was, but it doesn't happen overnight. And so with these bottlenecks, we had some issues with even producers having to dump some milk in some part of the country. We had that in California, unfortunately, happen too, although I don't think not as much as in certain areas. But eventually that led to processors putting some production limits on a lot of their shippers, depending on, you know, who the company is.
Mm-hmm. And then would you like to add on that?
Well, I would just add these concerns about what some consumers can't understand, and it's fully reasonable. You have at the same time, people say, "Gee, it's not in my supermarket," or "There's not enough of it." The farm price has fallen, and you say, "Gee, how could the retail price go up?" Or there's a shortage at retail, and yet the farm price has fallen. Because the really disastrous thing for the dairymen is the collapse in prices. And they really haven't hit yet, given the way our marketing order works. We, in a sense, have milk prices that are sort of driving in the rear view mirror. So we've held prices, minimum prices, to producers here through March and April, but the futures market tell us a lot. And I know we're going to get there, but that is a really severe collapse in milk prices. And part of that has to do with the collapse in income. We're entering one of the most severe recessions we've ever had in America, probably worse than it was 10, 12 years ago. And that's going to reduce, even when we relax some lockdowns, people aren't going to rush off to restaurants again or be buying like they were before, just because unemployment and low incomes and even retired people, the stock market collapses and they're worried about their income. So that's a really severe problem going forward for the dairy industry. And I just want to keep it on our radar screen as we go along here.
Yeah, great. That's a very good point. And we definitely are going to talk about that. But before, me ask you a follow-up question on the first one. So how much of the dairy products are consumed through food service and retail? Because one question that we hear a lot is that people say that their consumption of dairy products is the same as before or has even increased while they're at home. And then the question would be, how much of the lost food service milk has been absorbed by retail sales?
Yeah, and that's a very good question, and it's a bit confused in the press. And Annie cited an exactly correct number, that half of the expenditures on meals is away from home, or it was away from home before we had the lockdowns. But that's not the quantity of food, because of course the farmer's share of the dollar spent in a restaurant is far, far smaller than it is in the supermarket. And we've done some calculations on that, and working with economists at USDA at the Economic Research Service. In the case of milk, fluid milk, drinking milk, beverages, it's actually 80% that was traditionally consumed at home for that product. That's the quantity. And much of the rest was school milk and institutions and coffee shops and things. When it comes to cream, more of that was consumed outside the home. Just to give you a little, so what does that mean to a dairyman? It means the price of fat goes down because people don't replace that at home. But for the fluid, which we know that fluid milk tends to be about 2% fat as opposed to 3.5 or 4 out of the cow. So those kind of changes. For cheese, more of it in the restaurants. And as Annie, I think, very nicely pointed out, the kind of cheese matters there. So restaurants tended to be, pizzas and spaghetti and things where there'd be a certain different kind of cheese product than people may be used to using at home. And so it varies product by product, even within the dairy sector. And then you get products like hamburger, ground meat that's more outside the home, other products more inside the home. And so this really matters to the dairy industry. How much got replaced? We think, in fact, probably in terms of fluid milk, we may be using more. What a number of items, we don't have the final April data yet. What we've noticed for a lot of products is that people initially bought a bunch, stuffed their refrigerator full of cheese and other things, And then they, of course, cut back on buying it, and markets notice that. So that's where we are right now, and looking forward, it's more worrisome, I think.
Annie?
Yeah, I echo what Dr. Sumner was just saying. I think the fluid is one area where, is traditionally a lot more at retail. And so the negative impact shouldn't be as big. And especially with consumers at home, a lot of kind of reconnecting with their traditional breakfast. I've heard CMAVs doing cross promotion with cereal. So hopefully in the long term, that increased demand for fluid and consumers getting it at home will stay. And hopefully it's harder to stockpile fluid like cheese, for example. So hopefully that one should be a little bit of a silver lining. Another part, cheese, about half the cheese goes to food service, maybe a little bit more. But I think a bright part for California, and I know it's not a perfect story, but mozzarella sales, I think, have been doing better than other types of cheese sales, just because traditionally the pizza industry has been well set up for deliveries and takeout. And so not much has changed in their model. I mean, the economy is still going to impact them, but it's over a third of all the mozzarella in the United States that's produced in California. And so our product mix on that front is a little bit better positioned than some other states where, heavier on some wholesale cheddar, for example.
Let me follow up very quickly, because I think Annie made a good point, and that is our fluid milk is a California market for us. You don't haul fluid milk very far. When it comes to cheese, California supplies the country, and especially in something like mozz. So, and the idea that we're all used to having pizzas delivered at home, even when we didn't have other meals delivered at home. Pizza was a tradition. So that has been helpful, but it doesn't really, all this disruption really has left us with inventories filling up. Some people don't have enough place to store it, and so when the storages are full, when the storage is full, it really puts pressure on the industry and on the plants. They can't keep making more cheddar if there's no place to put the cheddar, for example, and that's a real problem for some dairymen.
Yeah, this information is very important, for us to have a better understanding of milk markets and a better grasp of what is happening right now. And let's change gears a little bit and go back to that discussion about the milk price. We all saw, as you mentioned, Dan, a sharp decrease in current low farm milk prices. Can you expand a little bit on that? I mean, how have the lockdowns in the US and internationally affected milk prices? And will low farm prices translate into lower dairy product prices for consumers down the line?
Yeah, so let's deal with the first one first. What we saw was a collapse in the futures market, and we saw the May futures market go for milk that would be used for cheese or milk that was used for making milk powder and butter, two big national and international items for California. They went from prices of around $17 per 100 pounds down to $11. So we're talking 30-40% declines or more in the price of milk for the futures market in May and June. Mm-hmm. And they're gradually coming back up, but they were expected to be around $16 or $17 throughout the year, maybe a little higher later in the year. And now they're sitting gradually up, getting up to maybe $14. So a massive hit. And that's not just taking all the profit out. That's taking all the profit plus putting every dairy farm in the red, even the most efficient. No dairy farm can produce profitably at the prices they're now facing, likely to be for the rest of the year. And I want to make, there's a technical point in all this, that partly because of our milk marketing orders, that doesn't immediately translate to the price that the farmer sees. Whereas in some cases, for some industries, the produce industry is something, if nobody buys your stuff and you plow it up, you get nothing for that. It's just gone. And the milk marketing order does give us a certain amount of smoothness here. So when a dairy farmer dumps milk, they're still paid for that milk. They're paid at a minimum amount. They get a pool price under the regulations. And so for most dairymen, that means that the worst of the price hit hasn't hit yet, but it's like driving full speed. your car's in a crash. You just haven't hit the tree yet, but it's going to happen. I mean, they are in the middle of the spin out. The crash is coming. They know it's happening. They're all preparing for it, and there it is going to be a very severe economic hit. Now, you ask about consumers. Let me just say very quickly, yes, it'll show up in milk prices. It'll show up in fluid milk prices and cheese prices as we go throughout the year. But of course, there's a marketing margin between the two, and supermarkets may not reflect the full price decline. Just like occasionally they don't show the full, if the prices spike up for some reason, they don't necessarily bring the prices all the way back up. Supermarkets tend to smooth prices a little bit. And of course, they have their own costs as well, and the transport and packaging and everything like that.
And Annie, would you like to add on that?
Yeah, just on the, I think on the dump milk, that's a really good point about the fact that the federal order allows to smooth some of that portion of the milk that otherwise wouldn't get paid. So producers get minimum pool price, which that only applies to pool milk, unfortunately. So some producers are still left out of that situation. Maybe they have to arrange something with their processor. But the kind of a side impact of that, even though the pool price kind of covers their milk, it kind of brings everybody's blend down, because that milk really is getting no return. It's just going down the drain. So just maybe a little addition. Unfortunately, that wild producer getting covered for it some, because that milk is not going anywhere and generating a return. Really, it kind of brings everybody else's price down. And so hopefully we're past the main issues with the dumping, and the supply balance, is a little bit better with now processors having placed restrictions on milk that they didn't need. So that milk, instead of being dumped and diluting the pool, it's just not being produced.
Yeah, it's a situation, as Dan said, that they're getting ready for that. And now that you're talking about this, let me ask you another question that I hear a lot. And not only from farmers or consultants, but also from consumers, is that considering the perspective of gradual relaxing of the lockdowns in some places and changes in processor and co-op programs to reduce the deliveries, what do you expect in terms of the dairy supply and demand balance for the next months? And what does that mean for milk prices?
I'll let Annie predict milk prices.
That's a really exciting topic. I love using the crystal ball. I think if we could bring it back, and balance it, it would be great. But the problem is the uncertainty, and I think we've kind of covered that a little bit. Is the lockdowns are maybe being eased, but how are consumers going to return to their previous habits? And that's where a lot of the uncertainty lies. And I think that the futures market, as we've talked about, really doesn't like uncertainty, and has been really reflecting that fact, because we've been talking, the president has been talking that April 30th was the date where things should start to ease up, and really we haven't seen. I mean, we've seen a bit of an improvement, but I don't think everybody's fully confident in the fact that people are going to go back to their previous habits. I think most expect the opposite, that it's going to be really gradual return, and so that it'll take time before that pushes the price of milk up. I unfortunately don't expect that the next few months are going to see much of a lift. In fact, May and June are looking kind of like the worst possible of the downturn right now.
Dan?
Well, and I think that's exactly right. The uncertainty is weighing on everybody. I will say we've got this big recession we're in the midst of. Federal policy on the consumer side has done what they could to try to put more money in the hands of consumers. For low-income consumers, the food stamp program and the WIC program, both of which help people buy milk, WIC especially, and help children and families with children. They're particularly focused on that. I think dairymen can support those programs and feel good about them, and they will at least help people have the minimum amount of money to be able to buy food. And we know food comes first for people. But it's still the case that the dairy industry, whether it's a bowl of ice cream or a nicer cheese than you'd normally buy, it does draw on some of the discretionary income. And when people have very low incomes, what many of us have gotten used to thinking of as necessities, some people just can't get. And we know there are lots of vulnerable people here in California and nationwide, and that will drag on the demand for dairy products going forward for several more months as we go forward, because nobody thinks we're going to come out of the recession. For a little while, people talked about a V-shaped recession. It was down dramatically, and then it would just bounce right back up. I called it the pogo stick recession, but that wasn't it. That doesn't seem like it's going to be happening. And I will say, since schools are so important for school milk, schools aren't coming back anytime soon, either here in California or in the rest of the country. And so that's going to keep the kids at home. We are getting through the flush season. The last thing I'd say about these programs where the co-ops and others are holding back on milk production, it's better to not produce it than it is to produce it and then dump it out. But dairies are set up to be optimally, they've got their labor, they've got their cows, everything is set up to be producing optimally. And then you say, cut back production by 10%. Well, you buy a little less feed, but that's a big loss by itself for a dairyman.
Mm-hmm. Yeah, definitely. Yeah, these are all great information. And as I said in the beginning, our objective here is to keep not only producers and consultants, but also consumers well informed about the dairy market movements and perspectives, as well as potential assistance coming from the government. And therefore, to conclude this 20 minutes conversation, because hopefully we're going to have future webinars exploring more in-depth some of these topics. But I would like to hear from you, what would be your advice for farmers across the US? And I will start with Annie. I'd like her to briefly talk a little bit about these, the assistance programs that the government are putting out there.
Yeah, there's been a lot of hope in the dairy community in terms of getting strong assistance to weather these times. And so we had some announcement last week, but the details are still still have to come out forward. But what we know is it's going to be a program that's going to pay dairies according to losses that have incurred from the first part of the 2020 and also from April through the next 2 quarters. USDA hasn't released the exact calculations. Based on my estimates, it's going to look between $1 and $2 a hundredweight. But the major issue for California on this, there's a cap in the payment of $125,000 per commodities. Mm-hmm. And so for California dairy, which tends to be larger than the rest of the country, I mean, that might take just a couple months at that kind of level to reach the cap. And so then they would be without coverage for the rest of the year. And so obviously that's something that we've been working on to try to expand that cap. But right now that is where it stands.
Mm-hmm. And then?
And I'm really glad you raised that one. The cap here is like USDA has done other things, and it's a political pressure in Washington. About half the milk in the country is produced on dairies, for which this program with its caps will provide moderate service, but not really that much. And this is also true with some of the other dairy programs we don't have time to get into. And it is a real problem. If the idea is you're going to try to help an industry, help the industry. Don't pick and choose which individual. I mean, dairy farmers are not generally low-income people. This shouldn't be thought of as like a food stamp program or a WIC program for the low income. It's to help an industry in a disaster. And if somebody were to say, gee, we'll have a program to help airlines, but only airlines that hardly fly any passengers, you'd say, gee, that's a stupid idea. Well, it's the same thing here. To highlight the farms that don't produce very much milk when you're trying to help the milk industry strikes me as just counterproductive. I appreciate the political pressure. Every state gets 2 senators, but it really makes no sense, isn't it? And Annie is more politically attuned than I am, and so I'll just call it what it is. It just doesn't make any sense, and it happens to disadvantage California, Idaho, Texas, places that produce a heck of a lot of milk in this country.
Definitely. Yeah. So thank you. I will conclude this short webinar for today. As I said, the idea was to share your knowledge and your information with us. And hopefully in the next webinars, we're going to discuss a little bit with more detail some of these topics. I hope to see you soon. in future webinars, and so then we can continue discussing updates that are happening in the dairy markets here in the US. Thank you very much, Annie and Daniel, and see you soon.
Yeah.
Thanks for having me.
Thank you. Bye-bye.
Bye.